Like the way you call it a game. But Raamdeo, good morning. First,
Good morning.
what can happen with regard to banks in the budget? Because that's the most important cluster in the market today.
Yes.
There is talk yesterday in the survey about a bad bank which can absorb the PSU NPAs. How will the market take something like that if it were to come about? Well or badly, given the need to finance 2 lakh crores of NPAs?
I don't think market would be that much, depends on the provisions and all. Is it how dramatic it is? Because everybody is interested in a solution to this entire problem of 70% of market share of the entire banking system is with this. So it's not only about the bad bank and the current NPAs, It's also about from here what? How do you run the this 27, 28 banks, and what kind of leadership, what kind of autonomy? So good thing is that it doesn't require money. It requires only political will or imaginative thinking and the courage to act, leadership, provide the leadership and do it. Because a lot of other problems, you need money. Here, you don't need money. So what kind of a total package comes, that will determine the whatever view one takes.
Okay. Well, I just want to mention that the Finance Minister Arun Jaitley has updated his Twitter page by stating that he will be presenting the Union Budget at 11 a.m. itself. So hopefully in about 10 minutes from now we will hear from him. But let's see what the latest is that we get. Raamdeo, hi, good morning. The backdrop to the budget is positive in a sense that the domestic cues have been looking good. Earnings are not as bad as one was fearing. The demonetization impact is hardly anything, especially in consumption. Do you think that post the budget, the trend could be on the upside as far as earnings and some of these themes are concerned?
Fundamentally, budget doesn't change anything, except for, as Udyan said, about the corporate tax rate. If you bring down from 30% to 25% or even 27.5% or 25% to be in, say, there is a schedule that this year 27.5%, next year it goes to 25%. So automatically market will discount it very quickly. That's the good thing about market, that it can discount whatever comes definitely in future. So so that could be a big thing to change that earnings trajectory of the companies which are profitable, growing and paying 33% tax. So the good companies will become even more, sought after. So that could be and I'm hopeful that there'll be something in the sense that 1%, 2%, and I think good timetable will be very, very precious. So even if you want to do next year, the impact could be today.
Perfect. Neelkanth Mishra of Credit Suisse is also with us now. Neelkanth, morning. We are all talking about this whole rural push, infrastructure push. But signs are that the biggest push might be in affordable housing or rural housing schemes. How much of a trigger could that be in reviving the informal economy or even changing your earnings expectations across a whole number of sectors?
I think rural housing in particular is, I think, a very big job creator. And one of the reasons that, one of the many reasons, but one of the reasons for the rural wage growth to slow down was also a slowdown in rural house construction. I think because of some of the structural changes happening in Indian agriculture, where we are producing too much and there is less income growth, the 48% of our workforce that is working in agriculture is actually seeing a lot of pressure. The government spending on rural housing is going to alleviate some of that pressure. But I think that where market expectations are, so that the way in our world it affects us is through the wage growth and therefore some consumer staple spending, as well as for cement volume growth. Now on both, I think the current expectations are perhaps too high. I think there will be a substantial slowdown in real estate construction, which is not currently priced in because of demonetization, GST, and generally the formalization of the economy, and also because of the continued weakness in agri-income growth. So some of the schemes that the government is going to launch, is likely to launch, because they've already given those signals to the Pradhan Mantri Awas Yojana in November, some of the statements made by the Prime Minister on 31st December. So a continuation of that, I think, is necessary to stabilize the market, but whatever volumes come, I think it will still be lower than what the market currently expects.
Okay, in fact, it's interesting you make that point because you know, as we speak, just ahead of the budget, a lot of these agri themes are playing out. Look at some of the fertilizer stocks; they're surging right now, 5-6% gains for most of them. They'll be flashing for you on your screen. There is an expectation that there could be some more details on the DBT, the Direct Benefit Transfer Scheme, and that's actually leading to a big jump. NFL is up almost 5-odd%, and that there you have it, RCF up about 2%. Sameer, before we let you go, since the budget is going to be over in about 2-3 hours from now, and then we'll move back to tracking global cues. How do you see the trend for our markets play out, given the context of the global market movement up until now?
Well, I think there is a case to be made for having a squeeze up of the market in March. The reason being that for foreign investors who come in via Mauritius or Singapore, all investments that they make up to March end are basically grandfathered. So right now the issue has been that domestic guys have been buying and foreigners have been selling. As soon as they stopped selling in the last few weeks, you saw the market go up a lot. There could be a situation technically that the foreigners also buy basically to have at least the first round of investments grandfather, which means they can basically avoid paying any taxes in 17. So in March, if the budget is okay also, you could have both groups buying. And that I think we've not seen for a long time. So that we have to wait and play for.
This is a very important point, Sonia, because I think we are all obsessing about this, whether LTCG will be 10%, 5%, and whether it'll be 1 year, 3 years. But starting when is very, very crucial because, for example, as Sameer is saying, if they say 31st March 2017, prospectively after that, there's a big case for everybody to buy before the 31st of March. So you could actually see a very powerful technical impulse for the market if the cutoff date is 31st March 2017. So I think the cutoff date is as important in the near term as the definition of the capital gains tax issue.
Okay, Sameer, you're saying something?
I was saying that for foreigners, it already is grandfathered. That means whatever we buy between now and March 31, coming in either via Mauritius or Singapore, which is a large group, they are anyway grandfathered. So for them, it's already announced. Whatever is the portfolio on March 31st, 2017 will be protected. Therefore, between now and then, there can be a case. For the domestics, if this hike is not much, and they're anyway getting flows, and mutual fund guys most probably will anyway not be taxed within the mutual fund. So they will continue to get their money. So that is a point which is quite positive and I think can play out.
Okay, Ashok, what about you? I mean, everyone's talking about the cutoff date, the possibility of it being 31st of March. How do you see the market take it?
It can be both ways. So if the tax was, if the government came back and said that from April 1, long-term capital gains tax will be taxable, then you will see a lot of selling in the month of March, because those that have completed 1 year prior to March 31 will want to kind of get out before that date. Even if the government was to not apply tax but say increase the period from 1 to 2 years, those who have completed 1 year by March 31 will want to get out and then perhaps come in and rebuy. That could lead to selling.
Selling first and then buying later.
Whereas if the government came with a legislation and said that you will only be subject to long-term capital gains tax on stocks that are bought after April 1, which is truly only prospective, because anything else has a retroactive element. And if you go back and hear our finance minister, he has been quite emphatic to say, I will try and avoid any retroactive amendments in the future. So if it is truly prospective and only assets or shares bought after April 1 become subject to tax, you'll see a double. You'll see the foreigners buying in the month of March, and you'll see domestic mutual funds buying in the month of March, because everybody wants to hold the stock prior to March 31.
So actually, this cutoff date could cause a lot of volatility, right, in the near term. The best case scenario is prospective.
I hope the understanding is clear after the speech, because sometimes people don't understand. They'll hear a bit of it and then they'll press the button and they'll realize, which is why the movement on the day after the budget is often a more sanguine move in the market. How many times have we seen the market tank on budget day and go up 500 points the next day? Because people don't understand the detail. So which is why Ashok will be around after the speech to tell us whether we have understood this correctly, because on that,
and so will you.
Well, his understanding on tax matters is better than mine, but we need to be sure about this before we press the panic button or the euphoria button, either way.
Okay, for now we have just about less than 5 minutes to go, and market is absolutely flat, but Bank Nifty doing pretty okay right now.
Bank Nifty, maybe there are lots of expectations with regard to public sector banks. But Raamdeo, how do you read the market right now? Because, you know, after the budget is done, you will analyze what has happened with this earnings season. More importantly, what's going to happen in the January to March earnings quarter, because last quarter might have had aberrations. You'll have elections in UP, and you're hearing what Trump is saying every day. So that's causing a lot of turbulence, at least in the mind. Put all these three together and tell us whether you're convinced that the uptrend will continue, or are we walking towards volatility next?
Then it all depends on what period you're talking about. As far as 3, 4, 5 years is concerned,
no, that's different.
Yeah, I mean, without blinking the eyes, the time to buy. I mean, at 113 lakh crores market cap, with a GDP of 150, 165 next year, I mean, now we are almost at the end of it. You're at 70%, less than that kind of a market cap GDP. So downside is very limited on a longer term basis. Very clearly, downside is limited. Upside can be anything. You know, so I'm long term clearly bullish on the market, and that's how I think about it. And so, but in shorter term, markets have moved up by like 10-12% in last 30-40 days. So if there is no solid thing to hang on to, the current gains, there could be some correction because of that. But like this corporate tax or this long-term capital gains tax, you know, for I mean, just to correct, in the past for domestic investors, they have never treated like that. Whatever changes have happened in the capital gains tax or any other thing, it's been, you know, of course it applies from 1st April, but if it is 1 year, it goes from 1 year, 2 years, it starts from 1st April. And all the past purchases, it has completed, if by chance it has completed 13 months, it doesn't qualify.
Correct.
That has been the history.
Yeah.
Anything can change.
Oh yes, we'll not have to wait too long to find out. But Nirmal, before we end, before we get into the budget speech, sectorally, is there any space where you're expecting an impetus this time around? I mean, as we speak, the fertilizer space, the agri space is seeing a bump up. Nirmal, is my voice reaching you?
Yeah, sectorally, agriculture is all. Yeah, I can hear you now. So agriculture will be focused and rural spending will be focused, no doubt about it. So fertilizer is one sector, but it will also impact sectors like two-wheelers, sectors like automobile, cars, commercial vehicles, and if they're spending on infra, then capital goods, infrastructure stocks, and we are talking about a bad bank and a good bank. And if something positive or something strong is done there, then a lot of PSU stocks can also see a lot of action. But overall, fundamentally, one point I want to make is the liquidity situation right now is very, very positive, because domestic funds in the last 3 months are almost 40,000 crores coming to equity. And FIs that were seller in November and December have turned buyers, because in last 1 week you would have noticed that dollar index has come off and US dollar is no longer strengthening as it was in November and December. So again, emerging markets are seeing very strong flows, and FI flows in India also have become positive. So all these factors point that unless there's something big negative, the underlying liquidity situation in market indicate to a big bull run.
Okay, just about 3 seconds left. It's like that feeling you get before taking an exam. I mean, this is like the exam for the economy, right?
Let's see what happens this time around. But I would say that if there is no major tinkering with capital gains tax, and there's a little bit of a growth push which is likely to happen, and corporate taxes will come down as is likely to happen, I think there's a case for the market to go up in the near term, because there is momentum behind the market at this point. I wouldn't be surprised if we go to 8,800, 8,900 in the near term if something wrong does not happen. After that, I think one has to take stock of the situation again, because many factors are unclear. We are driving very fast on a dark road. We don't know what the Trump factor is. We've just begun to see the first of the actions. The words have receded now action time. We don't know what GST will do. We don't know what this quarter's earnings will do. So there are uncertainties, and the markets would have gone back to pretty, not hugely rich, but fairly elevated valuation levels. I think you need to step back and assess the situation once the mood and sentiment of the budget has played out in its entirety.
Okay, well, we're still awaiting the finance minister to present the budget. So I think just in moments from now, we're going to get that. But you wouldn't be... No, nothing. I think
I'm
he's
coming.
busier. He's busy now.
I'm just coming. I'm in the restroom. I'm just reaching in 5 minutes.
That's not how Twitter works, you know.
No?
You don't have to update every single thing you're
Okay,
doing.
no, I'm not on Twitter, so I don't know.
But you know, before we get to that, you wouldn't worry about a general risk-off sentiment globally because of the deplorable statements coming in from Trump.
Markets are edgy, Sonia. You can feel that. I mean, you saw what was happening in Europe yesterday. US markets are falling, then bouncing back. But you've come to the crux at this point. You know, we've been hearing his rhetoric for 3 months now, and now he's pressing the button one after the other. And the alarming thing is, we haven't heard anything which is telling us that he will not act on what he has promised, which I think is a little disturbing. But let's toss across to the man.
Honorable members,